No, no,
So che
tranquilla.
magari...
Sì, sì,
Ok,
tranquilla.
grazie mille. Ladies and gentlemen, we are almost to start, so please take your seats. Thank you very much.
Ladies and gentlemen, good morning. My name is Vladimir Nanut. I'm the Dean of MIB Trieste School of Management, and I have the pleasure to, also on behalf of the entire school, to welcome you all to this important event. First of all, let me thank all the speakers of this that accepted to be with us today. And I would also thank our strategic partner, Assicurazioni Generali, that co-organize this event with us. And let me say that beside the training activities, as you may know, we run two main different programs, the master programs, full-time and part-time. The MBA in International Business was the flagship program of our school, then the Master Insurance and Risk Management, both held in English and very internationalized. We have more or less 40% of foreign students. Then we have the Executive MBA, another Executive Master in Insurance and Finance that we run in Milan. And moreover, we have several short programs within the executive education. We train managers for many important companies. So I think that besides these training activities, we aim to be really a point of reference for discuss, for analyze the more hot topics. And I think that today we have this opportunity discussing about the corporate reporting, which is a topic that really is becoming every day most important. I would like to really wish a fruitful day, and I hope that at the end of this event everybody could take away something, a value for the knowledge, for the experience. So now I will give the floor to the chairman of this session, Chiara Mio, and to other speakers. Thank you.
Good morning to everybody. It's really a great opportunity and also a pleasure to be here with you to discuss about this very relevant topic. The title of the day is The Future of Corporate Reporting and the Role of Integrated Thinking. And before leaving the floor to these very special and relevant guests, I want just to introduce you to the topic. Today we will discuss about corporate reporting. And first of all, let me start with saying this in another way. Accountants are able to disclose relevant information for the last 5 centuries, and in the last century we believe that there has been a great evolution from the first type of annual report to the actual situation. But we wonder if we really have relevant information when we look at the annual report. That's the business case for discussing and also for having an experience of different type of report. And my first point is that today we will discuss about the evolution of annual reporting, of corporate reporting, and we can say this in another way, the evolution of the general picture of the company. If we leave the floor, if we leave the opportunity to a company to have just 5 minutes to introduce the company, which are the information that this company will disclose first? This is another way to say we want a comprehensive picture, we want a relevant picture about the relevant information. And we will discuss if integrated thinking, integrated reporting is the answer, the appropriate answer to this, and if it's possible to have a complete picture in a very summarized, in a very concise way. This is the challenge of integrated reporting, a whole picture in a concise picture. The title of the day is very, very clear. We will not discuss only about reporting. We are not interested in the past. Every time we discuss about report, we discuss about what has already happened. We cannot change the past. We are really interested in the value creation and in the way that each company contributes to the value creation. And we need also tools to disclose the capability of the company to create value. Do we believe that the traditional annual report are the appropriate tools to disclose the capability of companies to create value? I have some doubts about that. That's why we need something better. And we will discuss about how a corporate reporting can contribute to provide a reliable picture to the capability of the company to produce value. And when we discuss about integrated thinking, we also will tackle another relevant issue. We don't want to focus on reporting. We want also to address how the company deal with the processes, with the capability of creating value. And that is, we will discuss about reporting and creating information and processes, the past, the actual situation, and the future. This is very relevant for us. It's a huge issue, a huge topic. I don't think that we will have a definite picture at the end of the day. In my opinion, academic people, but also companies will discuss about this, institution, organization, will discuss about this for the next 5 years, if we are lucky, perhaps more, but it's a journey, really, it's a journey. Today we have the opportunity to be here in Trieste. I want to thank the organization, the MIB school, to host this relevant event. I want to thank Generali for addressing such a relevant issue, not only from its own perspective, but providing a contribution to the general debate. And we have very, very important contributors. Let's start the day with Ben Renier, the manager in Accountancy Europe. Me and Ben met usually in Brussels, not so shiny day. Usually we meet there and it's always great, so I'm very happy today to meet you here. Ben from Accountancy Europe will provide a picture about the perspective of accountants and how the big world of accountants address this issue. And then we will have also the contribution by Sarah Gray. Thank you, Sarah, for being here. Sarah is a market director in IIRC, and so the organization that founded and proposed for the first time the integrated reporting. We will start with Ben, and after the two speeches of them, we will have a first opportunity to have a Q&A session due to the fact that Ben, unfortunately, has to leave before the end of the day. So if you have some question for all the other speakers, we will have the Q&A session at the end of the day. But letting Ben having his flight, we will have an anticipation of the Q&A session at the end of the two contribution. Okay, so I think I spent more than the time I needed. I apologize for this. And Ben, the floor is yours. Take your time to address the title of your speech, and the session is Shaping the Future of Corporate Reporting, the Core and More Concept to Present and Financial Pre-Financial Information, and how integrated reporting can support this evolution. Please, Ben.
Thank you so much, Chiara, and thanks so much for having this opportunity to engage with the Italian markets and in such a indeed beautiful place. I'm used to have a lot of meetings in great Brussels, in ugly buildings, and so this is extremely refreshing, and so hopefully my topic will also be refreshing at this very early moment in the day. So in the meantime, I got my slides. Perfect. Yeah, technology is also very important for the future of corporate reporting. So hopefully, technology will be at my side today. So, just to give you an overview. So I'm working for Accountancy Europe. We represent the accountancy and the audit community across Europe, and I'm actually responsible for corporate reporting and public sector reporting. So just a very quick overview of our activities related to the future of corporate reporting. So Accountancy Europe in 2015, we published a Cogito paper called The Future of Corporate Reporting, Creating the Dynamics of Change. And actually this paper was extremely well perceived by the market. We got a lot of interesting discussions with the different stakeholders. And this paper was quite big. It was not a concise report. And it tackled a lot of different topics, actually. So it talked about the growing audience, you know, should we still focus on investors or should we also look to other stakeholders, users, citizens, unions and other involved parties. Then secondly, we also spent some time on the interconnected financial and non-financial information because we believe today we're still sometimes focusing too much on financial reporting, and we believe that we should really evolve to a more corporate reporting scene, which actually brings together financial and non-financial information in an interconnected way. Then thirdly, we launched this core and more concept, which I will explain more in detail further on. And actually, in essence, this is a presentation concept. How can we bring all this information together in an interconnected, structured, and logical way? And then finally, as I was already pointing to it with the slide tool. So we believe that technology, you know, will be a very important enabler and driver for change in the future. Unfortunately, today we still see that corporate reporting, you know, it's a big booklet, a lot of pages, you know, disclosure overload, and we really believe that it's time that we move to the next step and that we come with some more technology-driven reporting. So having said that, in March 2017, based on all the input we received from different stakeholders, we actually decided to focus on 3 topics going forward. First, you know, we heard that people loved core and more concept, they really liked the idea behind it, but they wanted to see more substance to this concept. Secondly, we see a lot of proliferation of non-financial information frameworks around the globe. We counted sometimes like over 2,000 initiatives. I wouldn't call them frameworks, but you know, sometimes it's just ideas, but we see a lot of very promising initiatives, but we think that at this time it's important that they start at least coordinating their different initiatives. And then thirdly, you know, we will also do some work on technology. So that are the 3 key areas that we identified as our next steps on the future of corporate reporting. Then in September 2017, not long ago, we have a event in Brussels on the future of corporate reporting, where we had the privilege to have Massimo Romano from Generali to give the preparers side inputs. Also from the IRC, we had the pleasure to have Richard Howitt over for a keynote speech. And there we actually launched 2 publications. So core and more, because we received the comments from stakeholders that they wanted to have some more, you know, detailed guidance around these concepts. You know, we published this core and more Cogito paper. And secondly, we also launched a call for action to the different involved stakeholders to start, you know, working on this improved coordination of the different NFI frameworks and initiatives. And in the remainder of this presentation, I will focus on these papers. So first of all, you know, this whole core and more concept actually really entails smarter reporting. So it's about organizing reporting in a more connected, logical and structured way. Because today when we look to the reporting of entities, we see like really a patchwork of unconnected reporting. We see strategic reports, as a management report, we see sustainability reporting, we see annual reports, endless financial reporting disclosures based on the IFRS requirements. And sometimes we even see duplicate information, and sometimes it's even not consistent. So we really believe that everything, you know, should be connected brought together, and that's why we came up with this core and more concept, which in essence really would like to result in more effective communication by entities with a wider audience. And those different building blocks being the core, and then all those different more blocks would be enabled by technology, having links between those different building blocks. So the core would really be some kind of an executive report focusing on the most material and relevant information of a company. So Chiara, it was very interesting to hear that in the introduction you said like some kind of a 5 minutes, 5 or 10 minutes or 15 minutes overview of, the most relevant and material information of an entity. And we also believe that, we see society is evolving, and we see that not just investors are interested in the reporting of entities. And so we believe that this core report should really be addressed to a wider audience beyond the investor community. So that's our core. And then actually we have these more reports where there is clearly a link to the core report, and those more reports would really be focused on the needs of more specific stakeholders. For example, stakeholders are extremely interested in the corporate governance activities of an entity. Well, the details would be, for example, in a more report, whereas the key areas are covered in a core report. So the core would address a wider stakeholder audience, where the more reports, we believe, should address all the needs of also more specific stakeholders. But very important, we don't have Chinese walls. Those two components should be interlinked. So that's like really in a nutshell, what this core and more is about. Then a couple of more, details. So this core report, we came up with a couple of underlying principles just to make sure that we have qualitative reporting. These points may seem extremely straightforward. Unfortunately, when we're looking to the reports of companies these days, in a lot of cases we see very long reporting, very boilerplate, and it clearly doesn't meet these qualitative characteristics. So we find it very important, again, to make an overview of these elements. So it's important that it's clear, that we have a fair and balanced view, meaning good and bad news, right? Corporate reporting is not just focusing only on what's going good. No, it's also like focusing on the risks, the challenges, and we believe that both of these elements should be reflected appropriately in the financial statements. Then it should be organization specific, so boilerplate disclosures, it's a waste of everyone's time. Users are not interested in this kind of tick the box exercises. Then in a core report, again, very important to be material and to disclose relevant information. We are totally aware of the fact if you're focusing in the core report to a wider stakeholder audience, then the concepts of materiality and relevance become much more challenging. Because in today's corporate reporting world, those concepts are really based on the investor community. Of course, if you're going to widen this audience, then the concept of relevance and material becomes much more difficult to determine. So, very interesting concept, but it might be challenging. Consistent and comparable, reliable, verifiable, and reasonably measurable. This reasonably measurable, it's very relevant with respect to non-financial information, because there we see, again, what Chiara was referring to, that the whole processes of gathering information about non-financial information, really finding good ways to measure those indicators, it's still work in progress, I will say. So it's not at the same maturity as financial reporting is today. So that's definitely a working point as well. Then again, we love technology, and of course, it's very important to link this core report with the more components. Then, although I said core and more, in essence, it's really a presentation model. So we, do not aim to be a framework setter. We don't have that mandate. We don't have the headcount to do that. So this is essentially about the presentation concept. Nevertheless, for people to get some kind of understanding of what we are talking about, we stipulated some content suggestions. So what could potentially be covered in a core report, and what, on the other hand, should be reflected in the more reports. So based on a lot of discussions with different parties, we came up with this list. So in a core report, we believe we should focus on the business model and strategy. We should have the key figures of financial statements and an analysis thereon. So clearly, based on discussions with our stakeholders, we don't believe that the total, phase financial statements with all the detailed disclosure should be in the core report. No, we think that really the key performance indicators at that level and the description thereof should be included in a core report, and like the whole primary financial statements, including disclosures, would be one of a more report. Then secondly, we have financial information. Of course, the NFI agenda is also extremely important, and key information on these NFI indicators would be covered as well in the core report. Key prospects, main risks, and the related risk mitigation strategies are examples of what could be covered in such a core report, and of course, key aspects of corporate governance. Then we look to the more reports, which are, of course, interlinked with this core report. There we formulated some proposals as well. So these would really focus on the details, because the most material and relevant info would be covered in the core report. So what are we here, for example, talking about? Well, details on the risk management reporting and internal controls, more detailed information on corporate governance, the primary financial statements with detailed financial statement disclosures, what we now know as the IFRS financial statements, the face and then all the disclosures, detailed sustainability information. You all know in IFRS, for example, the criteria are extremely severe with respect to the recognition of intangible assets. Internally generated intangible assets cannot be recognized, and for external ones, the definition and the recognition criteria are very at a very high level. The bar is very high. So we know that companies, when you look to the stock, the value of a company, the stock value, and you compare it with the book value, most of the time there's a huge gap. And people are really interested to know, how the how to explain the difference. So we know there's a lot of intangible assets, out there which are not recognized in the IFRS financial statements. And so, these unrecognized intangible assets could also be part of such more report. Then tax reporting, for example, country by country reporting could be included in such more reports, and also employee related and remuneration reports could be included in those 4 blocks. Then a couple of other considerations. So we got a lot of questions of, okay, very nice, fancy concept, but how does this tie in with the regulatory and legal environment? So we had quite some discussions about that as well. And in the end, to have a very relevant core report, which is very useful for the users, we didn't want to end up in a tick-the-box exercise. So we wouldn't put the barrier and say, well, a core report should meet all legal requirements, because then it would undermine, the whole idea behind being concise, being added value, really focusing on the needs of the stakeholders. So we ended up saying, well, probably the core report won't meet all the legal and regulatory requirements, but the suite of the core report with the more reports would normally meet these regulatory requirements, just to make sure that you avoid another layer of reporting for the regulatory and legal requirements. So the whole set of core and more reports would meet the legal requirements. Then what I already mentioned some time, and technology is working very well over here, so technology, is really key for us. I think that would really be an enabler for such a concept to work. Because we really believe very strong in some kind of online reporting. We think paper reporting, the PDF reporting, we think, okay, that should be from a long time ago and should really evolve, because if corporate reporting doesn't keep track with developments, then I think other information providers outside the company will actually, provide information to stakeholders and will actually undermine companies of doing their own communication. So we believe very strongly in online reporting. There are already a couple of entities which are experimenting with online reporting. Linked with it, navigation, to navigate between those core and more reports. There are endless opportunities, of course, of technology for reporting. Think about dashboard reporting, that actually, based on the more reports, stakeholders can really, make an own selection of information that's relevant for them and populate some kind of a dashboard report. For the more reports, there are also a lot of possibilities where you can click on a certain figure and then get immediately to the detailed notes, for example, because now, sometimes you have hundreds of pages and you're just looking for this segment information and you just cannot find the information. So, that would be very user-friendly as well. And then, of course, link with the next speaker, integrated reporting, because we got a lot of questions like, how is this core and more related to integrated reporting? What are the addressing? Well, as I said clearly, we totally do not aim to be a framework setter. We don't have the mandate, and we just come with this presentation model where we believe currently, if you look at the ISB, they're trying to tackle this disclosure overload problem, but I'm not convinced that with standard setting they're going to solve this issue, because it's really about the mentality, it's really about culture, and it's also about how you present or organize your financial information, and we believe that this core and more could really be helpful in that respect. But clearly, we think this is work in progress, these are ideas, and we really encourage now the business community to start experimenting with this core and more concept to further fine-tune this model and really bring it to life. And I think, so we have a little bit the same roadmap as integrated reporting of, further developing and improving. And I know integrated reporting, very recently did a whole implementation outreach activity, to get input from the market and to learn from participants and to see where there are questions. So I believe it's a very interesting journey. So I was referring to our Future of Corporate Reporting event in September. So we launched this Core and More paper. Next to that, we issued also a call for action to enhance the coordination of the different NFI frameworks and initiatives, because we see really in the market, as said before, really a significant proliferation of different initiatives. And we really believe that there should be greater standardization, and hopefully, eventually, we will have some kind of a robust global, principle-based framework for also non-financial information reporting. It's not us saying that, actually, it's when we listen to the different stakeholders, to preparers, to investors, they're sometimes a little bit lost because there's so much guidance out there, and it's really difficult for them to have like a clear overview. What are the expectations? What are the principles, and what should we reflect in the corporate reporting? You know, for financial reporting, we have now IFRS. You know, clearly everyone has a clear overview of these principles. They're not perfect, but it's a good starting point. Well, we are, you know, we are aiming to achieve something similar for NFI. And really, at the end, I believe there should be one framework covering everything. That would be wonderful, that we do no longer have to make the distinction between financial and non-financial information, because in the end, no one is interested in this arbitrary, you know, groups. I think it's all about corporate reporting and telling your story, and that should be the focus point. So again, you know, to get eventually to this agenda, we first believe in cooperation. You know, we see the dialogue is already doing something promising at that level. Then improved coordination of the different frameworks, try to avoid overlap. Take, you know, the good bits from certain initiatives. They're very niche initiatives who only focus on, you know, climate matters and so on. So bring all this, and then hopefully one day come to this consolidation. In this call for action, we also referred explicitly to the ISB, because we had the pleasure of having Hans Hogevorst, the chairman of the ISB, at our event for his keynote speech. And actually, you know, he was quite skeptic. His speech is actually still online, and he was kind of skeptic of this role of the ISB in this wider corporate reporting agenda. But we noted really over the time now some very interesting, you know, evolution. And if I understood it well, last week the ISB board accepted to do an update of their practice statement on management commentary, which would actually be a very interesting vehicle for the ISB to take up this role of non-financial information. Because, you know, they've proven to be extremely successful in building a robust global principle framework for financial reporting. And, you know, they could help bringing everyone together and, you know, bring this agenda forward. So again, that's a very promising perspective. So very, very quickly, because otherwise I'm running over time. So one of the other concepts that we launched in our Core and More paper is this corporate reporting lab, because we see there's a lot of regulation in the market, and we actually would like to see more market-driven, you know, solutions for issues that corporate reporting of today is actually facing. So we would like to have this lab to foster innovation in the corporate reporting scene and to share best reporting practices. And actually, after our event in September, the European Commission came to us with respect to this initiative. And actually, you know, they were extremely interested in this concept, which actually already exists in the UK, the Financial Reporting Lab, that mainly prepares and investors together to try to tackle, you know, issues in the corporate reporting scene very successfully. And so we are now discussing with the EU Commission how we could actually shape this idea. So that's again a very interesting initiative, where instead of coming with additional regulation for entities, you know, we would bring the different stakeholders together around a certain topic, and they, you know, would come to some kind of a workable, really practical solution of a specific issue. And clearly, you know, this would also cover wider corporate reporting topics, not just the financial reporting. And of course, the outputs of these lab would of course be publicly available. So to finalize unfortunately, I'm not done with my work yet, so there's still a whole agenda to cover. So these are a couple of items, you know, for the future. So we really hope that the companies start experimenting with these core and more concepts. So hopefully, you know, even insurance companies would be interested to start, you know, exploring the idea of core and more. Then we will follow up on this call of the coordination of these NFI reporting initiatives and frameworks, you know, be present in these discussions, meet the different stakeholders and try to really, you know, be helpful in this possibility to get more coordination at that level. Then we will work with, for example, the Commission on shaping this idea of this corporate reporting lab. So it's not set in stone yet, but we see some promising, you know, moves of important stakeholders. So that would be a very interesting vehicle to actually shape the future of corporate reporting, have technology, and really move away from the traditional reporting and really embrace, you know, the possibilities and of technology and really listen to the different stakeholders and their needs. And that, you know, links to the last point of technology, where, for example, during our digital day in June 2018, we will have a session on corporate reporting. And thank you.
Thank you. Thank you, Ben. A very effective and valuable presentation. Really, accountancy profession has changed a lot. A whole presentation without a reference to checklist, audit, laws, and a presentation about the core and more, and about the relevance of information. So really, I believe this is a good news because you witnessed that the accountancy profession is ready to tackle the challenge of having a different perspective of reporting. This is a very good starting point for the day. I have been in Accountancy Europe, formerly Federation of Accountancy Profession, and having this group of accountants discussing about how to report, how to disclose the value, staying far, let me say, far from the laws, far from the audit, far from the checklist, far from the compliance, and starting from the value of information is really a good news. And if accountancy profession is here, if Accountancy Europe publish the core and more, I believe that we are close to the solution. We are very, very close to an evolution of corporate reporting, whatever it will be. But we have some input about how this evolution could be, and now I leave the floor to Sarah. Sarah prefers to stand up, and we will have, I asked Sarah to provide us with a picture about integrated reporting, how integrated reporting could be an appropriate answer to this core and more proposal. Let me also add that in Accountancy Europe there are a lot of supporters of integrated reporting, even if officially Accountancy Europe couldn't say we support, but there are plenty of supporters inside Accountancy Europe for integrated reporting. So the floor is yours.
Is this sound working okay? Yes? Good. And it's a great pleasure to be here to talk to you today. And I must say, Ben, I really welcome everything you've said. And I'm pleased to report that actually a lot of businesses are already demonstrating and experimenting with this core and more idea. And I think when people really understand that concept better, it will really help with their communications to all their stakeholder groups. Because, you know, there are some organizations that are really trying very hard to communicate with all their stakeholders, but they may be thinking of it in one giant communication. And as we know, that can be a little bit overload. So today I just thought I would share with you some key points about integrated reporting. And really, integrated reporting means integrated thinking and reporting. The reporting is the outcome of the integrated thinking that happens within an organization. And I think we'll be hearing more of that later from Massimo and others when we're talking about integrated thinking. So I may not have time to cover all of this, but if anyone's interested, I'd be very happy to share the slides afterwards. I thought we would just run over, and that's been covered a little bit already, you know, why IR might be important, what it is, a little bit of highlights of some of the impacts that it has, and then a little bit of insight into what we're seeing around the world, what governments, what regulators are saying, how investors are responding to it. And again, it's going to be very snapshot, but also importantly, how business is responding to this and their levels of maturity. So why IR? And I think Ben touched on this very helpfully, and I don't know how many people have seen this graph before, this kind of thing. I think possibly a few of you have, but really what it's illustrating is company market value, you know, in the 1970s, where 80% of the market, of the value of that company was in tangible assets that you could kind of find on the balance sheet. But in 2015, 80% of that market value is intangible. And investors and other stakeholders are really looking to understand, as Ben said, what is that intangible value? How is it measured? How are companies reporting on their performance against that value? And that's really where joining up that financial thinking with thinking about those other areas, whether it's the resources that companies are using, whether it's human capital, the people, the intellectual capital, the social capital, etc. And that's really what we're talking about today. And just a quote from Unilever, the CFO at Unilever. He said a couple of years ago, "The call for integrated reporting is beginning to rise in volume. With public trust in business undermined by scandal after scandal, we would do well to listen and act quickly." And I think that's what the IIRC tried to do. And I think companies have listened, and there are really quite significant changes in the way they are thinking and planning and reporting about their business. So what is integrated reporting? And I think I like this very simple diagram. You know, integrated reporting is enhancing the way that organizations think, plan, and report on the story of their business. And I think really it's as simple as that. Obviously, it's simple to say that, but very difficult to implement it in meaningful ways. I think there's a very important element of this, which is the long-term idea, which companies need to think short, medium, and long-term, because that really changes the decisions they would make. And this is about having future-fit organizations that are agile and can change and adapt to some of the really significant trends that are coming through, and they have to respond to. So integrated reporting is helping organizations to create clear, concise, and integrated communications to the market about how they create value, as we heard from Chiara, over time. It's helping businesses to think holistically about strategy and plans, make informed decisions, manage their risks, and build investor and other stakeholder confidence and improve their performance. How many people are familiar with the framework? Put your hands up. Do you? So quite a few, but not everyone. So really the framework, sometimes people think of frameworks and standards as hundreds and hundreds of pages of detail. In this case, there's 30-odd pages that makes up the framework. And really it outlines the fundamental concepts, which is this concept of value creation. It highlights the capitals. There are 6 capitals in the framework, but that's not a requirement for organisations to report against all of those capitals. It is really for them to consider whether they are important to their business and how they are managing and what impact they're having on those. And so those areas are obviously financial capital and manufactured capital, the buildings, all sorts of manufactured capital, natural capital, but also, of course, hugely important is the social and relationship capital that the business uses and affects, also human and intellectual capital, and the relationships that they depend on. So the guiding principles, I think actually a lot of what Ben talked about are very consistent with the guiding principles in the framework, to think about what's material to value creation, the conciseness, the core report. It really needs to be something that can be understood at a strategic level quite quickly. Connectivity between the different elements. So, you know, if you are reporting on your human capital and how you're looking after that human capital, the investment you might be making in training or whatever, what is the relationship between that and your financial capital? There may be some costs up front, but there's also value. So it's almost like a pre-financial. It's giving an indication of the financials in the future. And if a company actually has issues with customers or issues with employees, that might be a risk factor for the future of the financials. And then content elements. A lot of companies, certainly in Europe, are already reporting many of the important content elements that you would include in an integrated report. And probably the priority is talking about your strategy, the environment that you're working in, how you're responding to that with your strategy and your business model. But obviously the performance, the outlook, perhaps integrated reporting has more of a focus on the future and the outlook for the business. And as Chiara was saying, not just thinking historically, financially. So this is a lovely diagram. We call it the octopus. And I won't go into too much detail here, but it really represents in the middle, the business model, the activities of the business and what they are doing to create value within the business. And then on the left-hand side, you can see the capitals, the relationships, the resources that they're really depending on and pulling into the business. And not all of those, you don't have to use those names, but it's just a categorization as a guide. And companies will use their capitals very often. And then how those are transformed within the business, and then the outputs from the business, but also the outcomes in terms of the capitals. So if you're making a huge profit at massive social cost, you know, as a mining company, that too many people are getting injured during the process, you know, this needs to be understood. And in fact, mining companies are some of the best reporters in the world because they do understand this and they're already sharing that kind of information. Otherwise, they lose their license to operate and, you know, the local government or whoever is responsible for them will close them down. So I think we can see that it makes sense, but it's not always easy to do in practice. And just a quick word on the IRC itself. It's a very market-led organisation. It is a coalition of lots of other organisations who came together, and those organisations sit on the council and drive the strategy for the organisation. And so it is very representative across the market, and you can see companies, the CEOs of companies, investors, regulators, NGOs representing all kinds of special interests, accounting and standard setters. And I think that's quite important, that we stay in touch with the market and be market-led, and that's why we did this process on our framework to get feedback on how it was going with implementation of the framework and where further guidance and things might be needed. This is the vision of the IRC. The IRC's vision is to align capital allocation and corporate behaviour with wider goals of financial stability and sustainable development through the cycle of integrated thinking and integrated. I've mentioned already that we did this framework implementation, and just a couple of words on that. I think what we found is the framework stands up pretty well to the challenges of implementation. It's quite flexible, it's not overly prescriptive, and it seems to be making a difference. There are, however, several opportunities for further guidance and providing more examples of the practice, because it is still a challenge for organisations to do this, and I think the more and more are very helpful to that process. We had 400 responses, and I think it's quite important to say that there were some suggestions for minor revisions of the framework coming from a small number of people, but it was decided by the Council that certainly at the moment and for the next 2 years, because the framework only came out in 2013, the principles are working well and we should continue with that with more guidance. And so there is some certainty for business that there won't be immediate changes to that. The impact of IR, a little bit about what the research is finding. The IRC is actually about to launch a research database of academic research, because there has been quite a lot of research on this agenda already. We've got about 300 papers already, I think just with the abstracts going onto the database, but there's an opportunity to use that as a resource. It will be open access when it's launched soon, possibly before the end of this year. And just to highlight what some research is starting to show, increasingly actually, that reporting on this broader perspective, a broader information set, does have a positive impact on the cost of capital to organisations, and for many businesses, you know, that's really critical. It's also demonstrating a better performance from those who are doing IR, maybe because, you know, savvy management, if they're thinking more broadly, they're taking account of the risks and the opportunities coming down the line. That may be why. Also, those companies are more likely to attract long-term investment, and those organisations and their stakeholders will tend to have a better understanding of the organisation's strategy and greater confidence. The stakeholders seem to have greater confidence in the long-term viability of the business, and I think those are some quite important things that we're seeing coming from integrated reporting. On the next slide, we're just looking at, again, some highlights, and these are rather general. There are some research papers and findings to sort of back up some of these, but just to pick out a few. We are seeing changes. We're working with a network of about 90 organisations around the world, and this idea of integrated thinking, confidence in the metrics they're using to measure performance within the business and report externally. We're hearing that companies are saying that it's having a positive impact on their decision making and their strategy development and those kinds of things. Also importantly, the dialogue between framework and standard setters, the kind of key areas, the capitals, and is almost like an umbrella for conversations in certain areas, and the alignment between the standard setters and the IRC, along with several other standard setters, including the ISB, the GRI, the FASB in the US, and the Natural Capital Coalition. They are all having this conversation, this dialogue. They're not creating a new organisation, but that is quite an important development, and I think it will help with the navigation of corporate reporting. And in a way, the principles of IR can be a tool for companies to help them navigate that corporate reporting landscape. And one of the outputs from this corporate reporting dialogue was actually to publish a corporate reporting landscape map, which shows companies, you know, if you're trying to report on your think and plan and report on your natural capital, these are some of the standards that you can use that have detail in how to measure and manage that area of capital. Similarly for the other capitals, I think in human and intellectual capital there is less maturity, but there are still some standards available. So governments and the like, it's quite important that we've seen, obviously, the non-financial reporting directive coming out of the European Union, and I think that's taken a step in the right direction for companies to make disclosures on this agenda, and the directive is already seeing integrated reporting as a step ahead and the direction of travel, which I think is helpful. The Securities Exchange Board of India has asked their top 500 companies, not required them to do integrated reporting, but asked them to do integrated reporting because they think it will help investors understand and have confidence in those organisations. In other places, the principles of IARA are being embedded into corporate governance codes. In Malaysia, obviously, the King Code in South Africa, where it's been embedded for some time. That's a really important development, that it's a really integrated reporting can be a good way of demonstrating externally the good governance that you have, and also encourage improvements in that governance, perhaps. There are the bodies, the corporate reporting dialogue participants. Those are the standard setters that are taking part at the moment. And just to mention some of the things that they are looking at in their objectives at the moment. So they are obviously looking at alignment and trying to avoid conflict, to clarify and resolve any emerging issues from their respective activities, and express a common voice. I think they are also planning to look at the SDGs as maybe some common principles that they all sign up to, and that's helpful. So I think we need to watch this space. And the ISB, Hans Hugevorst, he is taking part actively in this discussion. And although he's not saying the ISB will take responsibility for all of this, he is really proactive on the agenda for this dialogue. So we come on to investors. And investors, you know, there's this idea that perhaps investors aren't calling for this. And I think they are, but they may not be calling it integrated reporting. I was quite interested in a survey that actually came out a couple of years ago, which was looking at what investors wanted, the importance of certain areas of information. And you can see on this graph, the orange, is the colour coming out? The orange on the left is how important a group of global investors thought that certain areas of information was, so how the company creates value, the company's business model, cash, you know, all those kinds of things, super important. But when they were talking about the quality of the information that they currently receive, you can see the yellow part of the bar chart, not quite so good. There's a real gap in the quality of the information they receive. And I think, you know, there's a real chance that things like the core idea of reporting, an integrated report, can help to meet that gap. We're also hearing from, you know, one of the world's largest investment organizations, BlackRock, the CEO, but this is the same across many investment organizations. They are calling on the CEOs in the marketplace to report on long-term value creation, to report on their strategy for longer-term value creation. And really, that's where the IR framework can be a tool to do that, and that's what we're starting to see happening. So what businesses say? They say quite a lot on this agenda, and I may have too much information in my slides, but I'll give it a go. So just pulling out a few statistics here, 79% of non-executive directors in a South African study, I think by the SAICA, the Institute of Chartered Accountants in South Africa, said integrated thinking increases the quality of an organization's dialogue with shareholders and other stakeholders. We're also hearing, and this was a Black Sun survey, that 92% of companies in that survey said that integrated reporting was increasing their understanding of value creation. And that was understanding at board level, at management level, at employee level, at external stakeholder level. They really saw a benefit, and it is that kind of story of the organization that people easily access. It's not quite an elevator pitch. You can't quite fit an integrated report into your journey in an elevator with somebody, but it is a really useful way of bringing the most strategically important things together, and then using that as a real key for everyone to be on the same page. 87% in the survey said IR participants thought that investors better understood their strategy, which is super important. And I think it was a PwC survey, 80% of investors believe that the quality of reporting affects investors' perception of management quality. So investors, if they're seeing good quality management reporting, their estimation of the value that the management team is adding will tend to go up. So where are we at the moment in terms of implementation of IR? We know that, in fact, since this slide was created a couple of months ago, I think the latest number is 1,600 organisations that we know about doing IR. Now, they may not be calling it an integrated report, but they are using the principles of integrated reporting as a tool to help the quality of the reporting they do. 62 countries, there are organizations in 62 countries around the world doing this. Some countries like Korea and Israel and are just coming online with just a few in some cases. But every G20 economy has organizations doing integrated reporting, and in some places like Japan, most listed companies, if not all, are on the journey to integrated reporting. And that is the case in South Africa as well. Arguably, in the UK, the strategic report is so aligned with the framework that everyone doing a strategic report is at least on the journey to integrated reporting. I think they have a way to go in reporting on the multiple capitals, but it's pretty well aligned. And I'm going to have to do apologies. This is just an example of some of the companies doing integrated reporting. And I just wanted to steal from Generali because it was such a good example. I think Massimo is going to forgive me. It was such a good example of this idea of an integrated report being at the core of reporting and linking to the other reporting that you do. In our modern society, there is no way that if we're going to achieve the SDGs, the Sustainable Development Goals, there's no way we can achieve that with only a very small amount of information. There is actually quite a lot of detailed information and the context for that information to make it meaningful that will be needed so that we can measure and manage what needs to be measured and managed. But this indicates that there is a way to kind of use our framework as a kind of golden thread to link your reporting and have a summary, have an integrated report, but make sure that's linked. And as Ben was saying, I think that idea, some companies like Schiphol, Unicredit in Italy, they already have strong online reporting where you can see the summary and link through to the detail. An example actually is General Electric in the US. They found that when they did their integrated report, though it's not so closely aligned with all the elements of the framework, the idea of a core report is very much there. And they found that the number of people downloading their report when they produced the summary went up hugely. You know, they had just a few people downloading their big report, but hundreds of people downloading their summary, including their customers, their employees. And so they've been really pleased about that. And just a word on the internal side, you know, I think the integration set obviously starts within the business. And what we're also seeing is management dashboards trying to use this information and connect it and understand the relationships between those different capitals. And this is just an example from PwC in the Netherlands. And they use this management dashboard for their own sort of management of the business, but they're also sharing it with companies. And most of the listed companies in the Netherlands are actually doing integrated reporting now. They're not necessarily using this as their management dashboard, but this idea that you can use technology to improve the way you can understand and think about these things, I think is quite important. And there was a quote in the Corporate Finance Review from a guy who's a specialist in strategic management, Paul Barnett, and he said, the biggest benefits of IR will not come from being compliant or from attracting investors, although that does happen. They will come from the discipline of needing to think, plan and manage in a more integrated way. This will help companies achieve the agility and flexibility they need to respond to change and seize opportunities. Chiara, have I got 2 more minutes for a I have a tendency to to talk too much. So there's just a couple more quotes actually to end the presentation and give you a little bit of insight. So Votorantim is actually a small family-owned business, or relatively small, based in South America, and they have been doing integrated reporting. And when we asked them about what impact that had had on the organisation, he said, the feedback on our first report was that information was clearer to stakeholders. Transparency has helped with bankers and investors. They understand our business better and have fewer questions. And actually, we are going to hear from Delas, I think, later. So I'm really looking forward to that, because I know, you know, some people think, oh, this is just for big organisations. And in fact, in some ways, it's much easier for smaller organisations. And I've known CEOs almost go, right, I'm going to communicate my business model and my strategy in a different way. And they've almost gone on the back of an envelope. And 3 months later, they've come out with a first integrated report. It may not be perfect, but, you know, it is quite a doable thing. And much quicker for a smaller organisation. The Crown Estate, a real estate organisation in the UK, they are very advanced on this agenda, and in fact their reporting is worth having a look at. They go a step further and are starting to kind of monetize the other capitals and put a representative financial number against the performance of human capital, etc. We have developed a new approach to strategy, incorporating integrated thinking, materiality, and the business model. Material issues have to be part of the business planning process in order to address the things that will impact the business. And I think I might end on that one, but just share a couple of more that I noted down. Another CFO of a tech company, which is rather a memorable quote, said, in fact, in our conference in Amsterdam earlier this year, integrated reporting without integrated thinking is like putting lipstick on a pig. So, you know, it's not just about what you put out there and make it sound good. It's actually what you're doing within the organisation. Another insurance company, Aegon, the CFO there, was talking quite well about trust, so I'll just share that. Trust is at the heart of what Aegon, and indeed all insurance companies, do. They deliver financial promises to millions of people. Integrated reporting has helped us to better explain our business and communicate how we create value for our customers, employees, investors, and other stakeholders. So although for an integrated report, when you hold the pen, you are perhaps primarily thinking about the investors in that business, if you are communicating well about your value creation, you will find that all stakeholders are really interested in that story. So it's not that an integrated report is only for investors. It is for all stakeholders. But in order for it to be reasonably concise and strategic, that is who you have in mind when you're writing it. And I think on that note, thank you very much, everyone.
Thank you, Sarah. Sorry to have to rush you, but we have strict time and a very full agenda. As I told you before, Ben has to leave during lunch, so here now we have the opportunity to have a short, very short Q&A session. Of course, if you have any question or input also for Sarah, we will get it. But primarily, I will suggest you to address to Ben question if you have any doubts, question, input, recommendation to Accountancy Europe. Okay, there. It's running, so thank you.
Yes, hi. I have a question on the topic of consistency and comparability that you have mentioned, because I see also the help that innovation like technology could give on this particular topic. But my doubt is on non-financial information, especially because there's no framework at the moment from what I've understood. And also because I think that it could depend on the strategy of the company mainly. So what happens, for example, if the strategy of the company changes and the strategic focus is, for example, of a specific market that needs a different set of KPIs on the human capital? So I just wonder if you have any thought on this.
Very tough question, thank you. I prefer to collect all together all the question and then to leave the floor to Ben. Is there anyone else? And then there. Let's start from there and then someone else? No, and then with Massimo.
Good morning, my name is Martino Merzek, International MBA participant, and I would like to ask you how to conjugate the more and core concept to the project-based organization in case of big projects like constructions, like shipbuilding. Thank you very much.
And then you're referring to the industry, to the several industries, okay, with a long-term horizon, okay. And then here in the first row.
Thank you, Ben. I don't want to spoil Andrea, but as you are a member of the biggest organization of auditors, can you tell us what is the biggest challenge that auditors community is facing to nurture this journey?
Okay, thank you so much for these very interesting questions. So, with respect to the comparability and consistency, indeed, it's a very important topic and it might be challenging. I think currently there are quite some models out there and initiatives to address the NFI agenda. So I don't believe there is really a lack. I think there's very promising initiatives at the level. So we're more calling for some Very interesting question also about core and more in the industries. Indeed, to be able, and that's what we also pointed out in our slides about being entity specific. I know certain framework letters, for example, for non-financial information, they even have supplements for. So indeed, because as Sarah said before, for example, in the extractive industries, they're really on, top of the report. License to operate, it's very important that they really show how they take all different stakeholders and the impact of their activities on society on a whole. Very relevant, and some players are already, helping entities with this industry-specific guidance to take it to the next level. Say, okay, these are the principles, but taking into account your specific background. It's not even industry, it's also big companies compared to SMEs, where we can see that even for and then I think there's a lot of challenges for the auditors, but we try to, instead of standing on the side, we try to be, part of the discussion, trying to, part of the discussion and helping, to participate in this very interesting journey to bring the future of corporate reporting to the next level. And if, not from a reporting angle, but really from, auditor's perspective, this whole NFI agenda is quite challenging because, auditors are really used to audit financial-based historical information and, give assurance to that. But NFI, it's a total different agenda. Colleagues of mine are really working on this, on project on how to give a certain level of assurance to this NFI information, and we launched a paper, I think, earlier this year after summer on this topic, because indeed for auditors it's a very challenging topic, but if we want to stay in the game, we will have to play the game and follow the evolutions in the market. So should ready to give assurance, because clearly when you talk to stakeholders and we hear that stakeholders, when they are looking into corporate reporting, they're expecting the same kind of assurance NFI information as over share-based payments or segment information. They believe if certain information is them, then it should be of the highest quality and and they can be sure that this reflects reality. So a lot of challenges. So still a lot of work for me. So that's a good thing. Thank you.
Thank you, Ben. And okay, thank you. Of course, also thank you to Sarah for the great presentation. Now there is a very sustainable coffee break, but we have a very full day, so I ask you to be on time at 11:10, no later, please, otherwise we will be late for the rest of the day. We will start with you or without you, so please, 11:10. Thank you. Take your seat, please. Thank you. Really, the day is very fantastic. The coffee was great, but we have a full agenda, and I rushed to the coffee shop to push people to be back here. So next time you have to go far if you don't want to come back. But let's proceed with our day. Now we will jump inside the practice. We have a selection of two good, I don't want to say best cases, but two very, very good cases. We start with Generali. Generali is one of the experiences that had been studied several times by myself and by other researchers. We contributed to the amount of research that Sarah refers before. Generali is experiencing integrated reporting, let me say, since the beginning, since several years, and they don't want to talk about integrated reporting. They really practice integrated thinking. So this experience is really, really valuable. And they are also proud to disclose it and also to collaborate with other organizations. And then we will have another company. I don't want to say it's a small company because compared to the average of European companies, it's not so small, but has a different size compared to Generali. So we will have here Della's company, but let's start with Generali, and I leave the floor to Massimo Romano first, and then Lucia Silva. Massimo, it's you.
Thank you, Chiara. Good morning. Massimo Romano, 20 years in Generali. I'm an evangelist of integrated thinking, integrated reporting, and it's a great pleasure today for me to preach the gospel here in my city. In my presentation, I want to touch three topics. The first one is the awareness, why the current reporting model is not working. Secondly, I want to share with you a fantastic example which demonstrates that miracles can happen in finance. And finally, I want to share some tips before bridge and lead the floor to Lucia, who is going to describe the sustainability strategy and how it is fit with the corporate reporting evolution generally. Having said that, I want to start with this religious slide. And in particular, are you a priest in an empty temple? This is the feeling I got when I realized that my product, the annual report, actually was not read by a lot of people. And I felt like this priest in a temple where just a few people are listening to him. And look at the back, tons of books, pages, and overload of information. And if you're working in finance, I think that you should think about that. Think about that. And I want to quote an auditor, a friend of mine, who told me once, look, Massimo, there are three categories of people reading and using the annual report. The first one, it's the reporting department, because they are doing that, and therefore they read that. The second one is the auditors, because they are paid for doing that. And finally, the third category, if really something is going wrong after some years, the judge. So if you realize that these are your audience and you are investing all your life, professional and personal life, in doing that, maybe you think that you have to change something. just to keep the religious slide, I like to quote Matthew, who said, they don't practice what they preach. And this is something very CFO-oriented, I guess. I practice the CFO community since a long time, and I think our community is really robust, is really disciplined. We are very clever, actually, but we realize that there are problems. So we understand there are problems, but we are not active, actually. We are not active. So our story here is demonstrating that we can practice. We can practice our gospel. And finally, I want to share this book, which is very interesting for the accounting community, and in particular, this is quite interesting book called The End of Accounting. These two guys are quite famous, actually, and the book is very interesting because it analyzes different aspects of why accounting is not working anymore. And I was struck by the fact that if you compare the financial statement of General Electric at the beginning of last century, and you compare that with the financial statement today, actually there is no difference. So in more than one century, the financial statement is still there, immutable. And one of the reasons why is because in accounting there was little experimentation. And I realized this morning that the fact that there is this big move, especially in the non-financial part, with a lot of people try to propose something new, is positive. As we said, this is a journey, but for sure something has to be changed. So when you realize that there is a problem here and you are investing your professional, personal life in doing something that has little value, of course, you are paid for be compliant, but maybe there is an opportunity to do better. And now I want to share with you one of the incredible examples of how integrated thinking can evolve the reporting, the corporate reporting. And I want to talk about the quarterly reporting. Almost nobody knows that quarterly reports are not anymore mandatory. There is a European directive allowing each company to dismiss quarterly report. But if you see in practice this year, the attitude of the corporation were very, I would say, heterogeneous. Different countries, different decision in the same country, different decisions, so forth, and so on. Now, in generally, we started this this journey specifically on the quarterly report, and we started from this step, which is back in 2013. We were producing 4 documents: the press release, the management report, quarterly management report, the financial presentation, and the financial supplement. So 4 documents, almost 200 pages. And you know, this was compulsory, actually, but the level of detail was not. It was just a common practice to produce such a big amount of data. So, thanks to integrated thinking, 1 year after, we moved to a merge of 2 documents, the press release and the management report, because we realized that from the legal standpoint, we had this lot. So very important regulation here, but even when regulation is helping a corporation to evolve, some CFOs are not embracing this evolution, because the typical answer is, come on, we always done like that, why we have to change? And this is not really the right way to embrace the evolution. But we did that. We reduced 30% also the number of pages. There was no reaction. But then something happened. In last year, we We had this European directive, and I said, thanks God we had regulation, because especially in finance, regulation is an incredible enabler to evolve the reporting, corporate reporting. So we had this European directive. The implementation in Italy was driven by Consob, and we had a very constructive dialogue with Consob. We explained how we were looking at this evolution. Of course, there was the risk that Consob could oblige all the corporation to use again the quarterly report. They had a very constructive regulation on that. Actually, they let the market follow their own journey, of course, with a very clear governance on that. But actually, we were free to go. We had an incredible involvement of our external stakeholders, investor and analysts, by the investor relation team, who was an incredible partner in this journey. And then we, in parallel, we had a very robust engagement and discussion with the board. And I like that this morning we talk about the board involvement. So after that, we realized that we could evolve in a very incredible way, in a very concise way, because we realized that we were in a sort of cage of numbers, and we realized that also investors were not really incredible focusing on the detailed numbers in the quarterly report. On top of that, you know that as an insurance company, as a life insurance company mainly, the quarterly is a very limited period of time. Our business model is a long-term one, so short-term approach is very dangerous for a company like us. And of course, corporate reporting should reflect this type of approach. So we decide to change. We decide to implement the regulation 3 months in advance. I think it was one of the incredible example of this story, well in advance, with a very structured communication to the market, so no surprise. And now I want to play with you. So let's bet. We move from 3 documents to just 1 document. And I want to ask you, how many pages? How many pages do you believe that we were able to evolve our quarterly report? Any bets? 20? 30? 15? All right, so let's see. Yeah, let's make an applause because this is really incredible. And this is really incredible because it's in line with the regulation. It's a miracle. Oh, no, it's not an A10. It's an A4. Actually, it's back. Let's be. No. Sorry. No, let's see here. It's 2 pages back and front, and we produce only 10 KPIs and then qualitative description of the trends. We provide the net result, the operating result. We're keeping the conference call, and specifically in the last one, the investor relation team here knows very well, our CFO got more than 30 questions in 1 hour. And this is a real factual evidence that investors like this type of approach. Of course, this is just an evolution. It's not really the end of the journey, but it's very nice to see that, for instance, Zurich in this quarter issued a similar approach, very light. Well, now let's talk about the future. I want to share this Bermuda Triangle disclosure. Of course, it's a triangle, and in each part of the triangle, you see the different drivers of corporate reporting, so IFRS, non-financial disclosure, and risk disclosure. So today, IFRS is very relevant, is very well recognized. Risk disclosure in Solvency II environment is increasing, and it will become more and more important, but the level of disclosure is very high. Non-financial disclosure, room for improvement. Result? Well, the result is that the situation is not really nice like today. And so how we can evolve this Bermuda Triangle? Well, in my mind, the weight of the different drivers should be in this way. So we have to invest more and more on the non-financial disclosure, very aligned with what Ben and Sarah said. Risk disclosure will be very relevant to us, but I think this triangle should inspire CFO communities on the evolution. And this is exactly what we are doing in Generali. Then Lucia will talk about later. We want to really put sustainability and all the non-financial disclosure topics on the top of the agenda. We are investing a lot on the non-financial disclosure project. In December, we will present our final proposition to the board, and maybe next year we will share with all of you another step in our evolution, because we are ready to deliver another innovative solution in the corporate reporting because of regulation and because of non-financial disclosure. Having said that, final tips. Well, I believe that the CFO must play a pivot role. I'm very happy to have Marco here, because he's one of the most innovative CFO in Italy, in the SME space. But this is not the CFO toy. And basically what I want to say is that CFO has to be in the driver's seat, but in the same car, we need other stakeholders. It's not by chance that here today there is the CFO and the sustainability together to share our view. And in all the transformation projects that we are running Generali, we really believe on this approach, and this embrace and this diversity inclusion aspect in the project is really part of our then it's our story made by our people. This is because in our example, the journey is really fed by our people. Unfortunately, consultant has a very limited role, unfortunately for their community, but I'm very proud of that, because you have seen that financial community, international financial community, is really considered Generali Group as a very interesting case, and this is a case made by our people. I'm very proud of that. And finally, the final mantra is the so-called 3R rule, which means rethink, reduce, and reuse. Basically, the concept is rethink. Try to see the things in different way, different perspectives, like the quarterly report, and you will see that there is room for improvement. We always try to reduce resources that we are using, not only financial resources, but also number of pages. And finally, reuse the resources that you have in the corporation. We have a lot of information in our organizations, and I think that the core and more concept is really telling us this concept to reuse and reconnect the information in a very holistic way. Very confident that the journey is just started. I see that the movement is growing. I believe that integrated reporting, integrated thinking framework is the solution, at least for Generali, and we are committed to continue this journey. Now, I'm very happy to lead the floor to Lucia. She's my partner in our non-financial disclosure project, and she will elaborate on the sustainability strategy in Generali.
So here we are. I think that we need some slides. Hello, hello. Here we are. So, as Massimo said, I'm the person responsible for sustainability and social responsibility for the Generali Group. And I'm proud to say that I'm also part of the integrated lab, which is the laboratory, is a place where we work, which is, the laboratory created by sustainability, CFO area, so Massimo, and then corporate governance. And this lab is really key because when I joined Generali 2 years ago, we started thinking in an integrated way. So we really had some meetings and decided that it was the time for us to sit all together, corporate governance, CFO area, integrated reporting, and sustainability, to think about the story we want to tell the world, to tell our employees on the way we create value over time, which is quite important for Generali, as we are here for 180-something years, and we want to be here for the next 200 years. So, it's really important for us to think in the long term and also report our this kind of ambition. So we were talking about reporting. I'm here not to talk about reporting, but to talk about what is behind reporting, so the management of this non-financial information. Reporting is key because when you report something, you give value to something. Someone said that what you get measured, you get managed. And I would say you get reported and known. So, what you get reported, you get known to your stakeholders, and it's really key. So, in the history of reporting, when we had just the financial reporting, and Chiara already addressed to this topic, we had just a snapshot of something very limited on time. So 1 year result and that's all. But this information were not enough. And we have some example with the crisis on 2008, that this information were not enough to understand the future of the company. Is the company creating value over time, or is destroying value? Chiara already addressed the topic of externalities. Are you creating profit, creating externalities, or creating a value for the society, for your stakeholders? And let me say that the expectations today from our stakeholders and from all the stakeholders, the investors first, are not just to provide, let's say, profit. Profit is kind of no-brainer. It's done, it's given in a way. What is also asked by companies like Generali is to have a positive impact on society. And this is not just, a kind of social responsibility topic. It's really about raising expectations from the context. And I'll be back to this in a few seconds. But so here, the bigger picture, so it's important. It's important to understand how you are doing your business. And sustainability and non-financial information, which give you this kind of information, is really about the how, so not what. It's not just, providing information on your impact on the environment. It's how you do your business, and this is really key. And why? I was telling you, because it's really about higher expectations from the context. Just to give you some examples, we are here also because we are talking about the non-financial information disclosure, but the main message of the legislator, the EU Commission, and of the member states legislators is not just to provide KPIs. Easy for companies like Generali, is to provide evidence that on some topics like human rights, like corruption, diversity, inclusion, company big as Generali are able to manage this topic. And the message is really powerful, because the message is clear, is that, whenever you do, whatever you do, the important thing is that from now on, human rights, for example, or corruption or diversity, must be part of your thinking, of your decision-making process. And this is really powerful. And it's not just the European Commission. We have, the Financial Stability Board providing guidance on how companies should address the climate change topic, which is really which is really impacting on insurance, on the insurance sector. Then we have, we mentioned investors. And again, we mentioned the concept of value. And as a sustainability person, for me, value is value for what? What is value? Is profit? Is planet? Is people? What is, the value? And with non-financial information, we aim at giving an integrated reporting. We aim at giving information on the profit, on the planet, and on the people. So, putting together all this information to have an overview, a holistic view on how the company creates value, if the company creates value, actually. I was mentioning investors. For us, investors are really raising importance in terms of sustainability and non-financial information. What we have been seeing is that, now our investor relator very often receive requests and questionnaires on sustainability, on non-financial information, how to behave on climate change, how to behave on diversity inclusion, how to behave on health and safety. So, and in raising, and why, again, think about the first picture, because this information gives you important information on how you manage your risk and how you are, the quality of your management. So the more you are able to manage this non-financial, the better is the quality of your management. So the better is, the company in which you want to invest. So in this picture, I just wanted to flag the complexity of requests that we receive. I mentioned investors, I mentioned climate change, but we have also some, kind of very high-level ambition, like the one set by the 17 Sustainable Development Goals. Have you ever heard before Sarah mentioned the Sustainable Development Goals? Please raise your hand. Not much, not many people. Okay. Especially for students, I think it would be really important for you to have a look for what are these Sustainable Development Goals, because also investors are starting asking for, how do you contribute to Sustainable Development Goals? Sustainable Development Goals are 17 goals referred to eradicating poverty, but also reinforcing infrastructure, climate change, gender diversity, education, and many others, 17 actually. So please have a look. They are the UN Agenda for Sustainability 2030, and they're really shaping the way government and the private sector are thinking about how to make the difference in the society in a way that is win-win. So it's about helping the society and also making profits, which help a company. And it is really about having a wider approach to big topics like climate change, and being able to solve this problem not just with many different and not coordinated activities, but with one coordinated activity together with government, for example, and the private sector. So they are really powerful, and they are going to shape the next, let's say, wave of all the strategic plans. So this is just to give you the complexity in which we are, and how it's difficult to, simplify this complexity. And I would say that, this is the starting point. So here the process we have followed to come to, the reporting that we have so far. And as Massimo already said, we are going to improve already this reporting again. So what is the process? So what is behind? What is the integrated thinking for us? Well, first of all, it's about listening stakeholders. Listening this complexity, trying to simplify, and having some, priorities. Here, our materiality matrix, which gives you an idea of our priorities, what is most important for us according to, what our management think, but also our stakeholders think. And then we have, put everything together, and then we have defined our own commitments, just to be kind of clear. And we have formalized our commitment in the Charter of Sustainability Commitments, which is a document, 6 pages, you can find it on our website, in which we define our high-level commitment on sustainability, our high-level positioning, but then we also define our more practical and precise commitment with our stakeholders. So, and behind this 6 pages chart, we have KPIs. We have goal, target, KPIs. Why? Because we want to walk the talk. Massimo was saying before that, you know, was raising the point around CFO, around communicating a lot, but then, you know, what is about making, doing. And here are the evidence and of the system that we have been building. It's not yet, it's a journey, so it's not finished yet, but it's that just to give you the framework of the integrated thinking, which is really about listening, prioritizing, defining commitments, measuring, and then, of course, reporting and communicating. And let me say that the reporting and communicating is key because it is a kind of assessment. So after reporting, you understand that maybe something is not working in a proper way, so you restart listening to your stakeholder, you restart prioritizing, and so forth. So this is the process of managing a company in an integrated way. And one of the evidence that we are doing already that is that we have some integrated lab. One is, for example, with Massimo and with the corporate governance team. The other one is with the investment and underwriters to, you know, focus on the topic of responsible investing and underwriting. We have another one with investor relation and corporate governance. So it's really about working together because the problems and the issues that we have to face as a Generali are so complex that sustainability is not enough, CFO area is not enough, corporate governance is not enough. So this is just to give you the, you know, evidence of the process behind the integrated reporting. It's really about integrated thinking. And here our CEO, if possible, that explains you better than I had done how the Charter of Sustainability commitment is about and what is our vision for the future.
The Charter of Sustainability Commitment sets out our vision to take concrete and measurable actions for running a sustainable business that creates value over time. It establishes a strong connection between the work we do every day and our contribution towards a healthy, resilient and sustainable society where people and businesses can develop and flourish. It is about being mindful of the strategic decisions we make and their impact on each stakeholder. For example, being sustainable means investing in a responsible way, screening our investment choices, and also offering dedicated sustainable investment funds through our asset management platform. Further, being sustainable for us means engaging and empowering our people. And finally, being sustainable also means playing an active role in the communities in which we operate beyond day-to-day business. Sustainability is a never-ending journey. We are integrating the United Nations Sustainable Development Goals into our strategy with a specific focus on climate change and demographic trends. My ambition is simple. Generali always wants to be at the forefront of positive change, inspiring trust in our brand and leading as a corporate citizen. It's only by doing this that Generali will become excellent at making its vision real to protect and enhance people's lives.
Kind of a snapshot of our starting point, actually, this Charter of Sustainability Commitment. And now I'm closing, just flagging one concept here, some kind of basic information on this charter. The important thing is that we have our CEO, and it has been approved by our board of directors. And why is important? Because in the integrated thinking process, governance is key. So it's key that the highest level of the company are involved in these processes. And I think that this is key also for us when we started, the integrated thinking processes, and we are proud that our leadership is really on this topic. Why? Because in this way, the integrated management, integrated thinking can really be real, can really be part of the measurement of the company. So we are in this journey, and we hope that soon, let's say in January, Massimo, we will be able to tell you something more of this journey. So thank you so much.
Thank you to Generali, first to Massimo Romano and then to Lucia Silva. Now I give the floor to Marco Pasquotti, CFO of Dellas. We change the presentation, and I'm very happy to have here also a presentation by an SME. Usually it's true, Sarah, we say or we listen to statement like integrated thinking is only for huge corporation, listed company, and there is no room for an implementation by SMEs. So, Marco, it's your time.
Thank you for inviting me to join this international event. Who is Dellas? Dellas is an industrial group based in Verona, Italy, which produces diamond tools for cutting and processing marble, granite, stone in general. So the range of products, as you see in the pictures, are all stone working processes from the quarries to the final finishing. The global market of diamond tools for stone is a small market, is a niche market. It's estimated to be approximately 700 million euro worldwide. And Dellas is among the four main international players, which have together 14% of market share. And the numbers of Dellas, that is an SME, consolidated revenues in 2016 are about 19 million euro, with a total invested capital of 35 million euro, 140 employees in the group. And the key drivers for the development, for the success of Dellas are the relevant R&D investments, because over the past 5 years we invested more than 5% of turnover in R&D. The expansion into international market, where the volume of extraction of stone have grown with an average of 6%. And so the export share is over the 70%. Dellas is present with this product in all main stone extraction markets. China, India, Turkey, Brazil, Iran, and Italy account for 70% of total extraction about stone. And so Dellas is present there with a subsidiary or with a dealer, ensuring high quality service to the customers. But consider that until 2012, there was only Dellas SPA, so the Italian company. And then we started a new strategy, an active internationalization strategy, by which we decided to be present in the most relevant market. So now the group is made up of 6 companies. The main one are the Italian headquarters, and then the Turkish and Chinese one. And in the next year will become important also the Ethiopian and the Brazilian one. To support this active internationalization strategy, Dellas has carried out a specific risk management model not limited to international liability program, but aimed to manage all type of risks. So other risk, or the operational risks, the financial risks, and the strategic risks. And among the actions to hedge, to manage these strategic risks, we put the non-financial KPIs and then integrated reporting. This because the non-financial KPIs, it was a way to manage, to measure the intangible assets of Dellas. Because in a challenging economic context like the current, we know that some companies with the same financials may have very different long-term results depending on the intangible assets they invested. So we started from this point. So Dellas started with a part of CSR at the beginning, then integrated reporting to hedge the strategic risks. So Dellas felt the financial reporting didn't allow to explicit some values of the company, the approach to the business of the company. And so decided to go beyond the financial reporting with two objectives, mainly. The first was a better communication towards stakeholder. Dellas wanted to explicit to the capacity of giving added value in a sustainable manner in the long term. And it was necessary to do this investing on some non-financial drivers. Non-financial drivers about customers, about vendors, about our employees. And the second objective was an internal objective, because Dellas had just concluded the generational passage of the business from one generation to the next. Dellas is a family-owned company. And before the passage, the founder was who embodied the values of the company, was who followed all activities in the company. And after this generational passage, with the transformation of the company from an employer to a manager-run company, it was important to have some KPIs, some indicators. So this indicator that was ESG factors, but not only ESG factors, also intangible indicators, became in some way the indicators of this evolution of the company towards the different stakeholders. So this was the two main starting point for us to start this journey. And we understood that also integrated reporting was also a value creation analysis, because you know that sometimes some companies incorporate a value that doesn't result from the financials, except in the case of M&A transactions, in which the intangible asset and goodwill is calculated in the valuation. Dellas tried to use integrated reporting also to explicit in some way the value of some intangible assets. So reducing also the gap between the intrinsic and the market value of the company. So we planning at the beginning, we started 2011, 2012, we planned a roadmap of corporate reporting evolution of Dellas. At the beginning, we started with a report that was a sustainability reporting. So following the GRI sustainability reporting guidelines. Then we implemented the integrated reporting, and there was a very important change of focus from the sustainability to the integrated reporting, because with the sustainability, the focus was the sustainability of business in terms of environment, social, and governance factors. Then, with integrated reporting, the focus is the value creation process. So the link, the connections between the financial and the other intangibles or ESG factors. So we try to answer to a question building this integrated reporting. Why does Dellas create value? And so we, as suggested also by the IRC framework, we try to represent our business model as a system which transform inputs through the business activities in output and in outcomes, in order to reach the strategic goals to create value. And this transformation of the inputs to the business activities toward the outcomes is done managing the capitals, the 6 capitals of IRC framework. And this capital, you can see this capital in the inputs part and then in the outcomes. Some examples of the inputs are, for example, the 43 years of history of the company, by which it was possible to create something like 2,000 types of solution for stones, or the investment in R&D in this year were 1.2 million euro of R&D, or the presence, the worldwide presence, so the 30 assistance centers in the world, or the good capitalization of the company, by which is possible to have some to go in this active internationalization strategy. So these are only some example of the inputs. These inputs through the business activities generate some financial outputs in our diagram, and these financial outputs have an impact in the different type of stakeholders, creating more or less value. And this creation or sometimes destroy of value are, in our vision, the outcomes of the reporting. So here we try to identify for each capitals the stakeholder involved, and so the teams of involvement of these stakeholders, and so the measure of the creation value is calculated by some KPIs identified by using a materiality matrix. You try to put a few number of KPIs, only material KPIs. So some examples are, for example, R&D hours and cost, or for our customers it's very important the flexibility, the delivery times. So some KPIs are about the production flow, the time of production flow. So the speed of our production can be a good KPI to measure the satisfaction of our customer. Or about the vendor, there are some KPIs about the seniority of the vendor. So we try to calculate the seniority, to understand, to have a measure of the partnership with them. Or with the last report, we put also the credit rating, so the average credit rating from the banks. And so we asked to our bank, okay, give me your credit rate, our credit rating in your standard, translate in Standard & Poor's, and create and calculate an average to put in the report in a clear way. Okay. Then there are also other example. So about there are some projects about energy saving, or about there are some KPIs about the turnover of the employees that is low as a result of a good training and a good safety at work for the workers, and so on. So there are many examples, but we try to find only the material KPIs, because the problem for us was not to put too many indicators, but only the indicators material for our business, so for our customers, vendor, employees, and community. So these are some example about the production flow. So we can show to our customer that the project to be fast in the production, so to be more flexible with the delivery times. This is about the credit rating, so the that I said before about the supplier capital. And in this journey, because as generally said, this is a journey, and this journey will continue in the next years. The job was the important thing at the beginning was to have a team not only for the finance, because the integrated reporting is related all the company areas. So for Dellas, at the beginning, the team was made up of 5 persons: the CEO, that is also the chief sales officer, the CFO, the operation manager, the HR manager, and the R&D manager. With this team, we drawn the materiality matrix. We decided how, which was the relevant KPIs, and started with this journey, with this roadmap. And it was difficult at the beginning to have the engagement of other colleagues, not from the finance area, because at the beginning it seemed some okay, integrated reporting. They say that it's corporate reporting, so it's your job. You are the CFO. So integrated reporting is your job. I'm not involved in this type of reporting. But then it was important to explain them that it could be important also for them to have integrated reporting, because some parts of integrated reporting are related to key processes of each business area, of each company area. Okay, and so we started. Now they are engaged in this reporting. So another problem at the beginning to starting with integrated reporting for Dellas was the metrics, because okay, we started with the framework, so the integrated IRC framework, but the IRC framework is principle based, so it was not so easy to take the metrics for Dellas. Okay. And so we try to manage different metrics for the different capitals. So for the financial capital or manufacturer capital, okay, we use the Italian accounting standards. But for the natural capital or social and relationship capital, we use the sustainability reporting guidelines, GRI G4. And for intellectual and human capital, that are where there are the KPIs about intangibles, the wiki intangible framework. So in this way, we try to find the metrics to build this integrated reporting inside the IRC framework. So the IR Dellas became also a case study. In a recent publication, the Integrated Reporting Movement by Robert Eccles, in the Italian edition, there is a chapter about Dellas case. We contributed through our interviews together with Generali, Oceania Capital, Gruppo Unicredit, SAP Guna, to the handbook for the change journey. That is an handbook about integrated thinking. And from 2014, we are proudly in the IRC example database, and so the journey goes on. Okay. To end my presentation, and which are the feedbacks from our stakeholders about this integrated reporting and this journey for the integrated reporting. Summarizing, the main important feedback was the image and reputation improvement of the company at the beginning, in general. A better positioning on the supply chain, because we have some multinational supplier and it was very important for them to have to have the possibility to read our integrated reporting. And then also the greater trust and credibility from the supplier of financial capital, from the banks. So the feedback are quite positive for our work. So the last slide, then I don't know if my time is finished, okay, is about this quote, because with the integrated reporting, maybe there is also a new role of the CFO, because now the CFO has to be a good communicator, not only about financials, about financial matters, but also about qualitative narrative information, and towards not only the banks or the investors, but also towards other stakeholders, all the stakeholders of the company. Thank you.
Thank you to Marco. The example of Dellas and NSME is really impressive, in my opinion. Very good piece of work. Thank you so much. And now we have another contribution, very relevant. We believe that information should be reliable. We need to trust on information. So Andrea Rosignoli, KPMG, the question I address to you, and you try to answer with your presentation, is could we rely on something different from annual reports? How can we rely, how can we trust on something that is not so compliant, not backward looking, not financial? And we hear words like journey, future, strategy. How do you feel as an auditor? Andrea Rosignoli.
Thank you. First of all, I'm feeling very good to be here with you today. I'm used to look backwards, usually, during my work, but I'm trying to look forward. So I take the challenge and I try to say some words with respect to what also the audit profession is going to go through in the next years. So thank you again to be here. I'm a partner of KPMG. I'm more or less 100% of my time is dedicated to auditing financial statements of the financial institutions, more or less. And by the way, I am one of the three guys that was in the picture of Massimo that was reading his financial statements, and by the way, without being paid to do that. So it's a message of hope for Massimo, so you're not alone, okay? I will try to go through some talks that we are currently doing within KPMG, involving not just auditors, but also some experts in terms of the CSR, and also in terms of integrated reporting. I will also try to highlight what are the current position, technical position, just a few words, with respect to what the International Audit and Assurance Standards Board is saying right now, but also Assirevi. But again, let me start a little bit with a sort of status of the corporate reporting right now. It's not working, technology auditors. Okay, thank you. Okay, this is a research that was published at the beginning of this year, performed by KPMG at international level. In these surveys, we find that there is not just room for improvement from an overall perspective, but also from a financial statement perspective. There is still room for improvement. This survey is based on about 270 larger listed companies in the world, and the aim is try to highlight the weaknesses and identify good practices within the presentation of the corporate reporting. So, what emerged from this survey? First of all, it's quite simple. You just have to give investors the information that they need. According to most of the participants to this survey, the annual report just look behind could look behind the past financial performance and just look forward and provide detail about strategy, progress, and implementation of the strategy. And what they should provide is more insight into the key business sources and how these have been managed, and in a view of a more long-term view. And the second step is to keep the report clear and relevant. So there are hundreds of pages, the pages highlighted also by Massimo before, that not always reflect the business priorities. There are a lot of information, and you know much better than me that when you have too much information, probably you do not have information. Third one is there is a general request to provide longer-term view using operational KPI. Normally, the information provided are really based on a short-term view, also because in these times the boards have a short-term view, more or less, and so these are quite aligned with the timing perspective of the boards, and so the reports represent the same horizon, time horizon. There is a general request of practical KPI in order to align the strategy and the results with respect to the strategy. And as fifth, we have analyzed that there is, they request to provide a deeper analysis of the strategy, as I said before. This is a critical link with respect to the integrated reporting, but also other initiatives that are going on in terms of enhancing the corporate reporting. Lastly, I think that, recalling your question before, there is a general request of, okay, that's the financial performance, but what's next? What's for the future? Normally, the corporate reporting right now tend to comply with the regulators, and again, this is not always the main important thing that the stakeholders want to hear from the corporate reporting, and want to be audited or want to be assured, if not audited, by the audit firms. And I would say that this is particularly true for the financial services institutions like insurances, like banks, where there are hundreds of information, very technical, very detailed, and not always very addressed or linkable to the strategy. So, in terms of initiatives to close this information gap, there is for sure the corporate social responsibility. And again, taking my role of auditor and going back I would like to show you a little survey that we conducted this year with respect to the developments of the CSR in the world.
Climate change is a financial threat to companies around the world. Extreme weather like storms, droughts and floods can cause damage and disruption to business. And companies that don't keep up with the switch to a lower carbon world could lose competitive advantage. Yet according to a 2017 survey from KPMG, about 3/4 of large companies around the world do not yet acknowledge the financial risks of climate change in their annual reports. Of the minority that do acknowledge the risks, very few provide investors with an idea of how much is at stake. This is just one finding from KPMG's 2017 survey of corporate responsibility reporting. KPMG's survey studied reporting by almost 5,000 companies worldwide and explored the trends that will shape reporting in the future. For example, KPMG found that the United Nations Sustainable Development Goals have had a big impact on business in less than 2 years since their launch. Already, 4 out of 10 company reports link the company's corporate responsibility activities to the SDGs, and that number is expected to increase rapidly in coming years. The survey also found that human rights is on the agenda as a business issue. Globally, around 3/4 of company reports identify human rights as an issue to be addressed. Companies in India, the UK and Japan are the most likely to acknowledge human rights, as are companies in the mining industry. KPMG's survey analysed both annual financial reports and corporate responsibility reports and found increasing integration between the two. A majority of the companies studied include corporate responsibility information in their annual financial reports. And this number rises among the 250 biggest companies in the world. To find out more about the latest trends in corporate responsibility reporting, download KPMG's survey from kpmg.com/CR-reporting.
Okay, so as we have seen, during the years there has been a quite significant improvement in terms of application of the corporate social responsibility information, and now more than 3/4 of the world's largest business company now integrate the financial statements with their non-financial information data, and most of these companies suggest that this is important for their investors. Another initiative to close the gap in terms of information is the integrated reporting. You know much better than me what at Italian level, both in the financial services and in the industrial market, which are the main, or at least the first movers in this direction, and of course Generali, but also lastly Unipol produced in 2016 its first integrated report for the financial community, but also some other very important entities at Italian level, like Eni, that by the way is international, operating in the energy, but also Atlantia in the infrastructure. So it's something that is going on very quickly and very importantly in the market. So there's not just, I would say, it's not just a matter of gap of information, but probably there is also a need for assurance, because this is always requested by the market to maintain the correct functionalities of the market and the correctness of the information that the operators are providing to the stakeholders. So this is always confirmed also by our surveys and by the request that the investors are presenting and are requiring, also in the context of very complex financial information provided in the financial statement. We now are seeing in the insurance market the introduction of new financial principles that relate to the IFRS 9 and IFRS 17. This will be a huge challenge for all the financial institutions for the communication of their results in the future. So, some efforts that we are doing as auditor in order to try to narrow the gap and improve our transparency in communication. There are two main topics that mainly relate to the effect of the new regulation. First of all, the large corporate have to disclose their policies in terms of non-financial information starting from this year, and we as auditor will be required to give an assurance about this information. As you know, there are items that are not particularly financially linked, so there are environmental, social, human rights, diversity, anti-corruption, and so it's a matter that is a little bit out of our comfort zone. It's something that we have to talk about. It's something that we have to add some new skills. We will see in the future what we will have to do, what we are still doing right now, but this is a first move in order to try to enhance and to develop also our relevance in terms of auditing firms with respect to the stakeholders. The second one relates again, was introduced this year for the reporting of 2017. We will have to completely change our report to the financial statements. We will have to include all the so-called key audit matters. So the key audit matters relates to topics like the materiality that we use, which are the main risks from an accounting perspective that the companies are facing, how we are addressing those risks, which are the procedures that we perform, and which is the outcome. So if you look at the last report of Rolls-Royce, that was the first that was issued by KPMG several years ago, on a voluntary basis with this concept, you can see that normally the 2 pages of Massimo was 2 pages also for the audit report, but not back and front, but just 2 pages. Right now the expectation is that our report will be more or less of 6 or 7 pages, because I have to address a lot of other topics that right now are not covered or better disclosed within our audit. So your report will be at least of 6 pages so, in the future. Because you write 2 pages, we write 6 pages. So I tried to summarize the current position of the main boards that relate to that issue, the standards on which we have to perform our audit or our assurance services. The first one is an international one, and the second one is the Association of Categories of all the audit firms in Italy. I wouldn't like to go in too much detail with this respect, because I would like to go a little bit highlighting what is the problem with respect to our challenge to give assurance about the topic that are included in the CSR or are included in the integrated report. So the reference standard for these activities in terms of audit is the so-called International Standard of Assurance Engagement 3000. That, by the way, is applied right now for several engagements that relates more or less to these topics: the compliance with the regulator, the compliance with contractual agreements, the compliance with, I would say, with no financial information as well, the pro forma financial information, and so on. So this standard is right now able to cover all these topics in terms of assurance to be provided to external parties, but unfortunately is not able right now to provide full assurance with respect to all the context of the integrated report. The standards, I would say, is structured in 5 steps. The first one, it's quite easy, relates to the testing. There need to be 3 parties. The first one that prepare the report, the second one that audit or assure the report, and the third one is the stakeholders. And this one have to be 3 different parties. It's quite obvious. There has to be a subject matter, something on what we have to say it's correct or is reasonable if it's not correct. There have to be some suitable criteria. This is really the key. And then, for sure, we have to be able to obtain sufficient audit evidence, and then we have to report. We have to write a report, and this is not so easy always to be done, especially when there are so different topics to be covered within one report in a very concise way. So, but again, the game is played with respect to the suitable criteria, because this is really the key. As you have seen, the way of the integrated report is presented by Generali is completely different by the way it's presented by a small company or small medium company in a completely different market. By the way, the integrated report of Assicurazioni Generali is not really like the integrated report of Funipol. First of all, because they have been applied in different times. So Generali started, if I'm not wrong, in 2012, more or less, and Unipol SAI decided to implement this only in this year, so in 2016. So these reports are not so easy to be prepared, and it could be also in the same industry, have different vision and different things to be highlighted, because the strategy is different. So which are the rule that we have to base, on which rule we have to base our audit? This is really the challenge. I would not try to spend more time with respect to all the criteria that relates to the suitable criteria, because it's really very technical and sometimes boring, if you want. But let's see this graph. I think that this summarizes also the path in terms of development that the corporate recording has done, and that it was highlighted also during this presentation this morning. There is a sort of evolution, there is a sort of innovation that is going forward, starting from the local GAAP or local IFRS or IFRS. Then you had some more information with the sustainability report, and then with the non-financial information, and the future for sure would be the core and more concept probably, and the integrated report. If you look at the graph, you can see that there is an increasing value in terms of providing the capacity to meet the stakeholders' needs, and probably also the transparency and the consistency of the reports. On the other hand, there is an increasing amount of subjectivity in providing this information. And the subjectivity is something that is managed, or better, is used by the management, because every management has different opinion. And so assuring an opinion is not so easy to be done. So right now, this is the area that we can cover in a certain extent, because for the local and IFRS financial statements, we are able to do an audit. For the non-financial information or for the sustainability report, we can adopt the International Standard of Assurance Engagement 3000 that I recalled before. We have to do a step forward in order to increase that line of defense that right now is trying to cover our professions, but it's something that will be moved for sure in the future in some way. I do not know right now how and when, but it's something that for sure will occur, because the necessity and the need of information and assurance about information is really key also for the transparent and correct way of functioning of the markets. And so investors will be for sure inspired by your integrated report, but also to the fact that a third party, an independent third party, have to provide an assurance with respect to the statements that will be included in your report. So, the challenges, as said before, identify suitable criteria, identify the rule of the games. Even if sometimes the game seems to be similar, you can have more or less the same with respect to a football pitch or a pitch for rugby, but the rules are completely different with respect to how you can play the game with football or with rugby. And so saying I have to assure that the rules are complied with respect to rugby and football are completely different, even if the football pitch is more or less the same. We have also to involve appropriate skills. Probably we are accounting firm, we will be probably assurance firm, not just for accounting, but we have to widen our range of capabilities and range of skills. We are trying to do that also, I would say also a little bit forced by the improvement that the market is going, or at least put as a constraint in terms of introducing technology, a very advanced technology. We are trying to set up some collaborative rooms in order to have immediate analysis together with the client with respect to some issues that could emerge from the analysis of the big data. So this is a completely different way of performing our activity as auditor. So incrementing the amount of information that we have to look and we have to try to assure in a certain extent will require professions that are completely different from a pure accounting professions. So this will be the challenge. This is what we have to do. Probably we have also to participate more dynamically in the discussion with the boards, like IIRC or the Core and More concept. We have to be a little bit more proactive with this respect. This is my personal view. It's not the view of Silevi or any others, but it's just my personal view. Because I think that there is no way to try to maintain the line of defense, but we have to be more proactive and go a little bit out of our comfort zone and try to provide, to be a part of this journey together with you, because this could contribute to the right functioning of the market. I have the picture of the puzzle. Probably in your puzzle, Massimo, or one that showed by Sarah, you can also, a little piece for assurance could be also something that can contain all the pieces together, because it's part of your journey. So thank you again, and thank you.
Take a seat here with us. Thank you for this impressive presentation. Of course, I believe there is a lot of confusion also in the directive. They talk about check. I don't know if you're familiar and you are at ease with check. That is not verification, that is not assurance, that is not audit. So I believe that also there are huge confusion on this. So thank you for your relevant contribution. I am I cannot say, I am the facilitator here, so I try to change also the agenda. Thanks to our speaker now, we save some time, and I believe we have time for no more than 5-10 minutes of Q&A session. So in the afternoon, we will save time, and we try to be more effective. Is there anyone who wants to provide with a quick reaction on the two presentations of the companies and of the KPMG presentation, or any additional question? Because I believe we have plenty of relevant questions. We have one contribution here from Professor Alessandro Lai in the first row, and someone else there. 2 people? Okay, fine. And then we go to lunch. Thank you.
Thank you, Chiara. I would like to ask a question to Massimo and Lucia, because we followed their path from 2013 and to 2016 of their integrated reports. And we now understand that this is a split, very important point for their integrated report to get the sustainability more inside the integrated report. So the question is, we follow it, we know that in 2016 we have some improvements, but which are the next steps to better integrate the sustainability into the integrated report? Thank you.
Thank you, Alessandro. If you don't mind, we get now the question, and so now we organize for the answer. So there, thank you.
My question is on prospect of renewable energy, and I would like to hear from you, from Lucia, that in respect of sustainability, as you know that we can see that we cannot implement sustainability until the insurance sector will keep on insuring into conventional sectors. So which are those major changes which you are looking into people, or you are convincing to the industry to indulge themselves more into investing into non-conventional sectors? Because you can see that if something is easily available among the people, which are like conventional sources, people will not be convinced enough to use conventional sources. As you and as the person from KPMG, everybody is talking about sustainability, low carbon emissions. So how we are going to convince?
So now we get the 2 questions, and let's start with Generali, but then I ask also to the other contributors if you want to react, even if the questions are not addressed to you, but if you want to add something. Okay, Massimo and Lucia.
So, thank you for the question. I'm not in the position to answer because this is confidential information. No. As I said, we started this journey many months ago. We saw in the non-financial disclosure implementation in Italy great step forward in the way we manage our corporate disclosure. So we set up last year the integrated lab, as Lucia said, and this was a great example of integration between us, Michele on the corporate affairs side, and also the remuneration team. This year we are ready to move forward. I cannot tell you if we are going to merge the two reports because this is not, I mean, the final position of our group. For sure, this is an option on the table. And again, we believe that financial can really improve the way we are managed the final step of our reporting process. But even more importantly, I think what we are doing and supporting Lucia in this journey is to put more and more the sustainability strategy in practice. The initiatives that Lucia described is really the consequence, the natural consequence of the journey, and then we will put together the material information of this strategy, which will be part of the strategy of the group. You know that next year we are going to deliver the new plan for the next 3 years, and I think this will be another very incredible opportunity to evolve that. So stay tuned because annual report 2017 will have very nice updates and surprises.
Of course, you know, our aim with the charter is to integrate sustainability into the core business. So, you know, that is the way. And talking about the more specific question on climate change and the way we manage climate change, so it's really focused on integrating thinking and management. We are doing many different things. Let me say that climate change is really complex and it applies us on many different levels. The first one is direct impact, which is taken for granted, but it's not. I mean, we are a service company, we don't have manufacturing activities, so, you know, people usually think that we don't have a direct impact, but still we have 70,000 people going around the world, so it's still an area on which we have a commitment to reduce our CO2 emission of 20% by 2020. So this is the direct impact, and let's say the more known one when you think about climate change. But we have two heads also. We are insurer and we are investors. Let me say that in terms of insuring and investors, we are doing our homework. We have already some, you know, responsible investment guidelines and some responsible, let's say, investment underwriting policies. So we exclude already some sectors. And in the responsible investment guideline, we really have a criteria or negative criteria. So we don't invest in companies which has a huge environmental controversies, among others criteria, of course. But we think that we have to do more. So we are really, and this is also in our sustainability report 2016, we have mapped our carbon footprint of investment and our exposure on underwriting, and we are in the process of defining a proper strategy. So really focus on climate, really addressing the problem, because we really think that we can make the difference. And then there is, let's say, a fourth pillar, which is really about you know, kind of being part of a coalition, being part of the big debate around the world. And just to mention one, in Italy, we are part of a working group together with the Ministry of Environment, UNEP, and other private and public institutions, private companies and public institutions. And we have been, we participated into a report on the state of sustainable finance in Italy. And of course, we are part of the biggest, let's say, debate on sustainable finance, which is now, you know, is one of the main focus at the EU Commission. And I really encourage you to have a look to the interim report, which gives you on sustainable finance in Europe, which gives you the, you know, the view of what is going on sustainability, sustainable finance in Europe. And it's really, you know, it's really high in the agenda of the EU Commission, really high. I hope that I have answered.
Thank you, Massimo. Thank you, Lucia. Now, I think we can just not conclude, but we can stop here for this morning session. We will proceed with two relevant topics: the education, because we need to change our culture. How can we change culture without an appropriate education contribution? And also the, let me say, the regulator point of view with Borsa Italiana, and it will be very, very relevant to have also the opinion of the stock exchange market. But first, before joining for lunch, please make an agreement each other with me. I make this proposal with you, official. I try to end before 4, so you will have this wonderful afternoon of Friday with sunshine in Trieste before 4, but you should be here at 5 to 2. 5 to 2, so we will start on time, we will squeeze the Q&A session, and we will close before, okay? So if you don't respect this agreement, I will close the coffee machine before 2, okay? So let's meet here, 5 to 2.